Hey everyone, it is Julie here with TipRanks, and today we're taking a look at 2 trending stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Right off the bat, I want to apologize if I sound a bit nasally today. I've been fighting off a nasty head cold for the last couple of days and I'm still quite congested, but we are pushing through it, but I just apologize if I sound under the weather. Today we're taking a look at 2 trending stocks. Now these are the most rated within the last 72 hours, so 2 companies that have been getting plenty of attention from Wall Street. Of course, we found today's stocks using the TipRanks trending stock page, which you can find over on the website or by downloading the TipRanks mobile app using the links in the description down below. Now we're going to jump right into today's trending stocks. First up is the company known for their golden arches with McDonald's. Their stock trades under the ticker MCD, currently priced at $283 per share. Over the past year, they are up 8.5%, though they did take a dip here into October and have been climbing up since, and they are up 6% in the last 3 months. When you look at this past 5 days, though, you can see that they took a drop off here earlier in the week. And that drop in stock price did coincide with their latest earnings report. McDonald's did have mixed results with an earnings beat but miss on revenue. For their third quarter, McDonald's reported revenue of $6.41 billion, which fell $40 million short of expectations. On the other hand, earnings per share of $2.95 came in 12 cents ahead of analyst estimates. Beyond the mixed results, investors were also paying attention to management commentary. Now, with their earnings release, management did of course say that they were confident in the resilience of McDonald's, but in the conference call, they did make mention to the low-income consumers' spending habits. They said that when it comes to the low-income consumer, what you're going to see is more attention to affordability. They believe consumers will be more discriminating with their dollars. They also said that they have seen slowed macro conditions in China and that they anticipate headwinds to continue into 2024. McDonald's is trending on Wall Street, having received 21 analyst ratings in the last 72 hours, and that breaks down to 15 buys and 6 holds. One of the more recent buys came from an analyst at BMO Capital. With their buy rating, they noted that despite a mixed fourth quarter earnings report that presented both an earnings beat and some cautionary guidance, they identified a silver lining in the company's ability to outperform amidst geopolitical challenges, particularly outside the United States. The analyst remains optimistic about McDonald's potential to gain market share, emphasizing the strength of its global loyalty program, the successful scaling of its Best Burger initiative, and superior marketing capabilities. On the other hand, we have an analyst from Stifel Nicolaus who came out with a more neutral hold rating. They lowered their price target on the McDonald's stock by $7, saying that maintaining same restaurant sales momentum could prove challenging for the entire segment as pricing moderates. With 29 analyst ratings overall, the McDonald's stock does come in as a moderate buy based on 20 buys and 9 holds. And the average price target of $324 would be an upside potential of 14.6% from current prices. Down below, we can see all of those ratings coming in just the last couple of days following that earnings report. On the high end, we do have a buy rating from Loop Capital with an upside of nearly 26% and a lot of other price targets in those double-digit teens there. On the low end, we do have a hold rating from Bernstein with an upside of 5.75%. And our second trending stock from the last 72 hours is On Semiconductor. Their stock trades under the ticker ON and is priced just shy of $76 per share. Over the past year, they are down 11%. You can see taking a big drop here at the end of October into November, but they have been climbing back up over 13% in the last 3 months and jumping up here earlier this week. And as you may have guessed, that bounce in stock price was in relation to their latest earnings report, where On Semiconductor reported both an earnings and revenue beat. For their fourth quarter, On reported revenue of $2.02 billion, coming in ahead of expectations by $10 million, while their earnings per share of $1.25 beat estimates by 4 cents per share. Management commented that their momentum continued this past year as they achieved record automotive revenue, which increased 29% year-over-year, and 4x year-over-year growth in silicon carbide revenue. They said that looking ahead, we are driving innovation beyond silicon and silicon carbide with our upcoming analog and mixed signal platform to further our leadership in intelligent power and sensing solutions. On Semiconductor is trending with 15 current analyst ratings in the last 72 hours, and that breaks down to 12 buys and 3 holds. Now, with some of the buy ratings, we have seen analysts slightly decrease their price targets, and that is due to the company's future outlook. One analyst from Truist did note that the Q4 results were better than expected, but Q1 outlook was soft and represented another reset. The firm adds, however, that it remains positive on the stock longer term as its portfolio adjustments continue to improve. We also had an analyst from Mizuho slightly lowering the price target, saying that the company's guidance was softer but better than peers. Feeling less optimistic was one analyst from Robert Baird, who did rate the stock a hold, but with a price target that would be a downside of over 20%. They noted that while the company has successfully managed capacity and demand throughout 2023, the momentum in long-term supply agreements is decelerating, thus potentially exposing the company to future pricing pressures. Additionally, despite the success story of SiC components, the growth expectations have been moderated within the industry. With 15 current analyst ratings, the Semiconductor stock does come in as a moderate buy. And the average price target of $89 would be an upside potential of over 17%. Down below, looking at our most recent ratings here from the past week, we do have that low-end price target with a hold from Robert Baird and a downside of nearly 21%. On the high end, we have Piper Sandler here back from the end of January with a 25% upside and several around that 18% as well. So that is a quick look at two stocks trending with Wall Street analysts this past week. Let me know your thoughts on these companies in the comments down below. I always appreciate hearing from you guys. And if you made it to the end of today's video, thank you for putting up with my nasally voice. Of course, these videos are never a suggestion to buy or sell any specific stock, so please make sure you always do your own research and due diligence. Thanks so much for watching. Have a great day, and I'll see you back here next time.